Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. The Indian stock market extended their recovery for another week, yet limiting their weekly gains weighed by broader market losses and investor anxiety over geopolitical tension after the terrorist attack in Kashmir's Pahalgam. Both Nifty and Bank Nifty rose by 0.8% each this week. The broader market, more domestically focused small cap and mid cap, closed with small gains of 1% and 2% each approximately, losing majority of the strength after investors turned risk averse. As investors' sentiment turned cautious, mid cap and small cap stocks bore the brunt of the sell off on Friday, driven by their elevated valuation and growing concerns over the potential earning downgrades. So far, Q4 earnings have been mixed with median EPS growth of just over 5%, which is very poor, hence failing to sustain the market's recent gains. One more interesting observation here is market for large cap continues to improve, driven by increasing FI inflows. In the last 8 days itself, FI have brought approximately $3.8 billion worth of Indian equities, signaling renewed confidence in domestic fundamentals. This buying spree reflects positive sentiments towards India market. Technically, on the weekly chart, Nifty has formed a small bodied candle with a long wick, a classic indication of selling pressure at higher levels. Nifty 50's sharp rebound over the past 3 weeks have been almost vertical, suggesting the possibility of some consolidation before the next major directional move. It will be crucial for Nifty to hold the 23,800 level to maintain its bullish bias. A breach could lead to extend profit taking, with the next major support seen near 23,400 level, where key moving averages such as 20-day, 100-day and 200-day moving average converge. On the upside, a decisive breakout above 24,400 could reignite bullish momentum. The small cap index and Nifty are currently at their immediate resistance zone and may require a couple of attempts to break though. Fundamentally also, it would be wrong to expect a trending market given the lackluster earnings performance of Q4 FY25 so far, and expectations of continued earning slowdown for the next quarter as well. Globally, Wall Street advanced on Friday, notching weekly gains as investors looked for signs of easing tension in the US-China trade dispute. China, by the way, silently exempted some US imports from its 125% tariffs, but still denied Trump's negotiation claims. In the current scenario, tracking the geopolitical worries, we expect the market to remain volatile in the coming weeks. However, such a volatile scenario offers incremental buying opportunity as the historical data over the past 3 decades suggest that there have been major 3 instances of escalation due to armed conflicts in India. That is, Kargil War, 26/11, Pulwama attack. On each occasion, it formed a major bottom. Once the anxiety around the event settled down, the market garnered decent return in the subsequent 3 months. Concluding, we expect volatility to remain elevated, wherein Nifty is likely to consolidate in the broader range of 24,500 to 23,300 zone. The Nifty Midcap and Small Cap Index has outperformed the benchmark in the recent week. The broader structure is intact, and the recent pullback after the sharp up move of 18% and 21% should have been seen as a breather. Hence, we believe that both Nifty Midcap and Small Cap indices should hold their previous swing highs. On the longer term, the path to India's strong, sustainable GDP growth has been laid over the years through policies with a focus on domestic manufacturing and import substitution, and emerging as an export hub being the key focus area. From Invest India to Make in India and finally PLI schemes for various sectors are strong drivers for the future growth. One can look to add fundamentally strong stocks posting good results in Q4 FY25. That's all for today. Wishing you a profitable trading week ahead. Thank you.